Hello, Alex Cole, and welcome to the Go No Go show for all of our friends here at StockCharts TV. Thanks so much for tuning in every Thursday afternoon at 3:30 p.m. Alex, how are you doing today, my friend?
Doing very well, doing very well. Lots to talk about. Let's jump into
Lo-
it.
Lots to talk about. We'll come back to this chart of Bitcoin probably at the end of the day, but really a signal for a risk-on environment. Let's start with a chart of the S&P 500. On the daily basis, we're in amber neutral territory. For those of you who are new to the GoNoGo Charts methodology, what we're trying to do is blend all of the most important technical indicators that are widely used and heavily back-tested, all of the stuff that can give us an indication of securities within a trend, but we don't want all the extra noise on our charts. We want to just separate that signal. So the heavy mathematics is done in the background, and we've got this color-coded chart that gives us an idea of trend conditions. So right now, those amber bars are when all of the inputs of the GoNoGo chart are in neutral territory. But Alex, neutral doesn't always last very long. What's jumping off the page to you on this chart of the S&P 500?
Yeah, we often find that those amber bars are a transitionary phase between trends. And what's jumping off the chart to me, Tyler, is look at how this zero line has been respected as a level of support in a go move or resistance in a down move. It's really just been on the positive side of zero when price is trying to trend higher, and on the negative side of zero when price is trending lower. And every time that oscillator switches or breaks the support or the resistance into the other direction, then we get price following and making an attempt at a move to start a new trend. And that's what we've got here again. We've had the oscillator break below zero. That was followed by a no-go correction. And now we've got the oscillator back above zero as we've seen these consecutive amber bars taking us out of the no-go trend. So in all other cases for the last year, when we've had a move to the other side of the zero line, it has at least been followed by a change in trend color. So let's see if that happens again here. And if it does, then we'd expect price to take out these intermediate highs and perhaps make an attack on the high from last summer.
Absolutely. We've all been taught multiple time frame analysis helps us understand the primary direction of the market. So let's zoom out a little bit from this daily chart. Let's start with the weekly, and we'll move to the monthly. So what are we seeing here on a weekly basis, Alex?
Yeah, well, the weekly is interesting as well, because although the weight of the evidence still suggests that we aren't in any kind of go trend yet, we are seeing that amber uncertain bar, the go fish bar, on the weekly chart as well. And if you look, what we've experienced over the last several months is some bullish divergence with higher lows in the oscillator, in contrast to the lower lows in price. And we turn to the zero line and we see how we are threatening to break into that and stay in positive territory. So although the weight of the evidence, and even if we put another trend line on here, we're still sort of on the side of the downward move since the beginning of the year. There are some signs that that trend is being threatened.
Absolutely. As our good friend JC Peretz likes to point out, before stocks can go up, they have to stop going down. What a wonderfully maybe self-evident but important rule to remember. And so we're seeing this neutrality on the daily basis. We're seeing the neutrality on the weekly. Let's jump up to the monthly, where I think the important evidence for us, if we look back over even a decade of market history, we can see that there are very few trend continuation icons on this chart, right? Going back to 2012, we have this established go trend. And if we're looking at these very long-term perspectives, all of that bear market action in 2022, which by all estimations was fair and orderly, right? We were stepping down and we had relief rallies, but not tremendous volatility in terms of what we saw in 2020 or even in the great financial crisis in 2008. So in this monthly view, we were in the weaker form of a go trend. What catches my eye, Alex, is that a negative momentum, the persistent retesting of the zero line down in that GoNoGo oscillator, the lower panel. Right now, we're seeing a strengthening of the trend conditions on a monthly basis for both December and here in January. For users of GoNoGo Charts, you can find this as an ACP plugin right here on StockCharts. You can look for that GoNoGo oscillator to break through the zero line. That's going to be our first indication of a return to positive momentum. And that's what's going to trigger those trend continuation icons.
Yeah.
Alex, anything else from the monthly perspective that we should be keeping in mind?
No, just that, as you said, there's something orderly about this, and that it's nice to see the markets do what you expect. We're getting some continuation. We see how the oscillator stayed above the zero line throughout this time period, and you can see that after all of these aqua bars, we are getting trend continuation.
Absolutely. Wonderful. So let's move on from the S&P 500. Let's take a look at some of the global macro forces that are impacting equity markets and risk assets generally. Let's turn our eye to the TNX. That's the 10-year Treasury yield. Today, January 12th, we started off this morning with the December CPI data. And Alex and I are not big fans of trying to analyze the nuance and subtleties of Fed governor speak, nor do we want to project our own emotions into what we think the Fed might do with the next rate hike, right? Was it soft enough on the inflation data to bring that from a 50 basis point move down to a 25 basis point? Let's let the talking heads try to guess at the future. Instead, we want to look at what's actually happening from a price perspective. There's a lot of truth in price. And when we look at Treasury yields, we're seeing them in a persistent no-go trend, right? So we're exhibiting bond buying, stabilization of the fixed income market as these sovereign yields are coming down, offering some relief to risk assets. Alex, from a go-no-go perspective, the trend on the TNX, the 10-year Treasury yield, seeing some negative momentum. Anything else that we want to point out on this chart?
No, I think people were worried when we saw rates rally. We thought perhaps there was going to be a return to that rising trend, the go trend in rates, but that hasn't really happened. We've quickly turned back around into no-go bars, and the oscillator quickly back below the zero line. So that could all provide relief for equities moving forward if this no-go continues.
Absolutely. So turning away from the TNX, let's pull up a chart of the US dollar for another maybe favorable no-go trend. If you are a risk asset enthusiast, the strength in the US dollar in 2022 is befuddling to many analysts and investors. And here we are, we're taking that pressure off, continued no-go trend on US dollar. Talk to us about what's happening on the right side of the chart. We had that brief spike back into positive momentum and then a return below zero.
Yeah, and you can see my cursor here. If you think of those as resistance levels, you can see how that spike that coincided with that positive momentum pushed us right up against the resistance from these lows here that was support. And we fell away from that very, very quickly. That was the confirmed resistance there. And you can see us go back to a stronger no-go bars and then a continuation icon as the oscillator crashed back below zero. And that, of course, has given price the momentum it needed to set a new low now. We've just broken lower. So this is definitely no-go trend in place, lower highs, lower lows, strong purple bars at the moment, and the oscillator in negative territory. So as you said, potential relief for equities again here.
Absolutely. Now, we know that the correlation between the US dollar and assets like gold and other precious metals has been inversely related for decades. So let's pull up a chart of gold that hasn't been anybody's friend for many, many months, year and a half, as many expected gold to be a flight to safety. Here we are, finally, gold showing up and getting a little shinier. Talk to us about this gold go trend in gold.
Yeah, about 2 or 3 months now, we've seen this persist. We saw gold try a couple of times, but never persist, never continue like it has this time. And we can see just if you've been watching us or if you follow us, we really look to this zero line to provide support when in a trend. And you can see how as the go was sort of struggling and going mostly sideways and really trying to hold on to those go colors, we saw continued support at the zero line, go trend continuation icon after go trend continuation icon, and then a break to new highs as the oscillator really got well away then from the zero line on heavy volume. Remember, when the oscillator turns to the darker blue, that signifies some heavier than usual volume. So really all things then started to point to gold making a little bit of a break, and that's exactly what's happened.
Absolutely. We look to those trend continuation icons as that signal of momentum coming back in the direction of an established trend. So this is technical analysis 101 for trend followers out there. We want to understand the trend continuations and then have them supported by sort of the corollary or the confirmatory indicators like momentum and volume. And that's exactly what we're seeing, that breakaway within the Go trend. Fantastic, Alex. Let's take a look at fuel oils. First, starting with the USO chart, United States oil coming back a little bit into into resistance of a downtrend line. What jumps off the chart for you here?
Yeah, oil's been choppy, and I think that we really want to see some sort of resolution. And overall, if you look at this from the larger time frame, we are moving lower and lower highs, lower lows. But right now we've got an amber bar on the daily chart, oscillator at 0, so some definite uncertainty in terms of the direction of oil.
Absolutely. And if we could jump this out to a weekly basis as well, I think that provides a little more context. Obviously, incredible run in the energy markets throughout 2021 and the first half really of 2022. But it does look like that trend is in confirmed no-go territory on the weekly basis, at least.
Yeah, I mean, you have some weakness and you see the pink bars, but you see this no-go has been in place. And you can see how it was very sort of slow and very meandering, right? There's some smaller bars, the no-go just sort of carefully stepping down. And it took a while to confirm. We saw a lot of amber bars. We saw the oscillator struggle with the 0 line. But you can see the same concepts here as well. Trend in place. You want to see the oscillator primarily stay above the 0 line and give you those continuation icons, allowing you to scale into those positions. And now we're seeing the reverse. We're seeing a no-go in place. Oscillator has been below and finding resistance at 0, getting turned away by 0. And we're going to see if that happens again with the oscillator back at 0 while in a no-go trend.
Fantastic. All right, let's get back to a conversation about U.S. equities. We want to discuss today if there is a favorable condition for risk assets like equities and even that first chart of Bitcoin that we had up on screen. Let's look to our GoNoGo sector Relmap to give us a sense of what's happening underneath the hood. At GoNoGo Charts, we want to look at not just absolute trends, but also how they are comparing in ratios against the benchmark. So here we're taking a look at each of the sector groups, those sector ETFs, against the benchmark S&P 500 index. And when we strip out all of the price action, we can just look at the trend conditions of that relative performance. So Alex, walk us through the heat map here that we're looking at.
Yeah, you've got the growth sectors towards the top, technology, discretionary, communications, and then you enter that middle section of the chart where we've got I suppose middle and then the lower section being those defensive sectors, but then you move into energy and financials, industrials, materials, healthcare, staples, utilities, and of course, real estate. And you can see how we've been in a defensive picture, generally speaking, for some time with the middle and lower half of this map really showing us where the outperformance has been. Now, you can still argue that the Go trends are in some of those sectors. We'll take a look at some securities in the financial sector, as well as materials, industrials, things like that. And that's where the outperformance is coming from. It isn't yet coming from growth, even though communications has surprised a few with its relative Go trend. You can see that the no-Go trends are still in technology and discretionary. But as more of these trends or as more of these sectors turn into Go trends, that's obviously good for the overall index.
Absolutely. And in summary, right, the most defensive, right, healthcare, consumer staples falling out of that relative outperformance. And so we're really seeing cyclical sectors lead, like energy, financials, and materials. Alex, let's pull up a quick chart of the XLC, the communication sector. Serious relative outperformance for the benchmark. But I think what's important to look at in both the relative and the absolute trend, we're coming up against some pretty clear resistance levels for the communication sector.
Absolutely. I mean, coming up, we're right at it, really. It's going to be a struggle potentially. Now, we are seeing Go bars. We are seeing momentum on the side of this Go trend. But like you said, there's some quite serious resistance here that we've been unable to get above several times over the past 6 months.
Absolutely. All right, let's do a quick rapid fire. We'll pull up a number of tickers today. If we're investors going through a shopping list, let's start with Berkshire Hathaway, financials sector outperformer. BRK is what we're looking at, and looking at a breakout against a resistance area, correct?
Yeah, we're looking at a much more established trend in place. When we were looking at that XLC chart, it was just sort of flirting with go bars. And if you're looking at Berkshire here, we've had a go trend in place for some time, and you can see how we've had some continuation icons. You can see how we ran up against resistance once, twice, three times. We're now trying to do it again with a head of steam. We're back above zero in terms of the oscillator, so momentum is on the side of the go trend as we try to break above this resistance, and we did creep above it. We closed just above it, arbitrarily yesterday. We're trying to set new highs as the market moves today. But what's interesting, if you don't mind, is if we back this out to a weekly chart, you can see those levels that we had on the daily, and you can see how they stretch back. We had resistance, we had a clustering of support and resistance here. We had resistance again, but you can see that on this longer time frame chart, we've had some bullish resistance. We've just found support at zero. We've got that continuation icon as we move to those stronger blue bars. And if we can get above this level, then there's really there's some room above this resistance line for us to move higher and try to test these highs from earlier in 2022. So that would be quite a nice run if we can close above these levels that we saw on both the daily and the weekly chart.
Absolutely. Bullish divergence between the trend and the momentum oscillator. Not one of those indicators that works every single time, but important evidence to what was perhaps the conclusion of that no-go trend. Alex, let's turn our eye to Freeport McMorran, FCX. We've obviously seen commodities in a bit of a run, and looking at FCX for this continuation of a go trend.
Yeah, absolutely. And these are the sectors that are outperforming, and it's been a tough market. It's been a really tough market this year. So, you got to give yourself the best odds. And right now we're seeing materials outperform on a relative basis. This is one of the companies that is in a go trend. We're seeing a bit of a move today and yesterday, and we'll try to look to see if we can take out these prior highs from April. This is the weekly chart, of course. And if we drop this down to the daily, we can see how it's really started to establish itself. And you can see this sideways movement that was mostly held up by support at the zero line has now really been broken through. We saw another continuation icon here as price moved higher. And now this past week, we've seen some real strength in price. So you take that back to the weekly chart and you say, okay, let's see if we can get that confirmation on the weekly too.
Absolutely. Obviously, looking at classical pattern recognition is an important part of what we do as well. Big fans, and certainly supporting a lot of our work with things that we discovered by Edwards and McGee back in the day, the Bible of technical analysis. And so a breakaway within that go trend as the momentum oscillator breaks back above zero, certainly a strong signal for Freeport McMorran. Let's look at the Dow Holdings, DOW. For another great go trend condition.
Yep, similar picture. This is a materials stock as well, the chemical business, and you can see the same kind of thing. Now this is nice because it gives us a chance to demonstrate the go-no-go squeeze. When we get these trends in place, but we see consolidation, we see sideways movement like that, then we know that there's reduced volatility, and that's of course when the oscillator falls to the zero line. And when it stays at zero, which you can see on and off, it's had a hard time getting significantly away from the zero line. And here it rides the zero line for several bars, allowing the go-no-go squeeze grid to climb to its max. Now we know we've got really reduced volatility. Look at that. How the price bars have got smaller. We saw a little bit of uncertainty, but then the breakout of that go-no-go squeeze, often out of reduced volatility comes higher volatility. And that coincides then with a break above this resistance level that you can see on the chart. And now we've made new highs and we've really moved quite significantly higher, and volume picking up as well. So a nice strong looking chart for Dow.
It's such a great reminder that technical analysis is a way to visualize investor behavior. And you point out that narrowing price range, that tug of war between bulls and bears, the go-no-go squeeze. For those of you who haven't seen it yet, we did a 1-hour educational special for StockCharts TV back in November. And embracing volatility is something we really stand behind. When you find those periods of volatility contracting, that doesn't mean that there's less trading. It means that the crowd, the market itself, is trying to figure out which direction we're going to head. And of course, when it is a decisive move, that breakout of momentum to the upside, that's when traders all pile onto the same direction of the trade, and we see an emerging price trend. So great chart of Dow Chemicals. Alex, let's take a look at Carvana, CVNA. Definitely not something that has been on the shopping list, so to speak, for our portfolio for some time. Talk to us about what we're seeing on a daily basis first.
Yeah, certainly something we've been staying away from for a while, but this actually went out to our daily list this morning because of the change in the technical environment that we're seeing. Now, we know the weight of the evidence is still a no-go. We're seeing that no-go pink bar, but if you can imagine this trend line sloping down here, we are starting to test that. We also see the resistance that should be here from the gap lower. We're testing that as well. We are at the top of that upper bound of resistance from that gap that we saw earlier in December. And you can also see how we've got some bullish momentum with the oscillator making a higher low while price moved slightly lower, mostly sideways, but that still would be bullish divergence. And then again, now we go to our oscillator level of 0, and you can see how throughout this entire move for Carvana, the oscillator has stayed on the side of negative momentum. Every time it comes up against the 0 line, it gets rejected, and that gives us these no-go continuations now, these red circles, telling us that this trend is likely to continue as momentum surges back in the direction of the trend. Well, this time we did not get that. So this is a clear difference in the way that this trend is playing out in terms of the fact that the oscillator, which should have found resistance at 0, didn't, and was able to break through into positive territory. So we're wondering now, will this give price the push that it needs to break out above the resistance from that gap and set a new higher high?
Interesting. Our friend Charlie Bolello, a fellow CMT charter holder, put out on Twitter earlier this morning some breakdown of that CPI data. New cars on a year-over-year basis still climbing higher, although a softer inflation number. Used cars actually negative by more than 8% this month. So if you're fans of used car dealers, I bet that's a very narrow group of people, but certainly we're seeing some of that macroeconomic data in support of firms like Carvana. Alex, let's move on from Carvana. Let's take a look at Dave & Buster's. PLAY is the ticker. And certainly we've all been through a difficult flu season, a lot of COVID cases, but people are looking to get back out and have some fun. So talk to us about this emerging go trend here.
Yeah, it's been a while since I've been to Dave & Buster's with the kids, but perhaps we'll have to make a little trip.
Yeah.
New highs. You can see the break of this downward sloping resistance line. You could probably pull that back towards the left side of the chart as well. Mm-hmm. But look at how that's really been driven by the significant break into positive territory from the oscillator. So no-go correction in place, oscillator below 0. We know that should have been resistance, and it wasn't. We got a really quick break, heavy volume, amber bars telling us that there's uncertainty in the markets, and now we're above this resistance level and we're painting go bars. So if you are looking for a play in the discretionary sector, then we'd be looking to see if price could get above the highs from earlier in this chart, which gives it a couple of dollars to run.
Absolutely. And all of these, we're looking at pretty long time frames. For those of you who are trading shorter term, capturing or getting in earlier on these trends in the intraday charts, we're going to see that go trend emerge much earlier. Yeah. Alex, let's pull up a chart of Disney. Speaking of where you could take the kids, personal anecdote, my nephews could not get into the Magic Kingdom in that week between Christmas and New Year's. It was sold out, which is insane when you look at the ticket prices for entrance to those parks. Yeah. Obviously, Disney, an amazing company that's much more than theme parks, merchandising, streaming services, you name it. Talk to us about what's happening as we break out of this trend line right on the color change of our trend conditions.
Yeah, absolutely. I mean, you see it in effect here, downward sloping trend line, breaking above those levels with the GoNoGo trend indicator painting amber bars. And then again, you've got the oscillator breaking above 0 into positive territory. So this is a situation where perhaps if you're looking to be early on a change in trend, you could perhaps step down in time frame and have a look at what's happening. Have you got a signal on a 2-hour or a 4-hour chart? Because you're seeing some changes here.
Absolutely. We have to bring it up. Bed Bath & Beyond, BBBY is the ticker. I've had a couple of conversations just about whether or not 2023 is offering new names in the meme stock world. That's a pretty well-defined no-go trend for a company that's in bankruptcy and shutting all of its stores. This is not a recommendation by any sense of what to buy or sell, but we got to take a look at this chart. So Alex, talk to us about what's happening here for Bed Bath & Beyond.
Yeah, just something has happened. That's the beauty of technical analysis for me, is that we can confidently say that there has been a change in the perception of this security in the markets, and there has been a change in the way it trades. We were in a very sort of consistently moving downtrend. Nothing really to report here, as it stepped down on nice sort of low volatility bars, and the oscillator below zero getting rejected by the zero line, rejected by the zero line, again rejected by the zero line. And then something changed, and we had heavy volume, and we've had price race higher. So again, another one where perhaps if you went down in time frame, if you were looking to just see what's happening on a quicker time frame, then you can see how on the 4-hour chart now we're actually in go bars. You got the oscillator break above zero on heavy volume, and we've got go bars coming into the chart here already on the 4-hour chart. So just that idea of stepping down in time frames just to get earlier or sensible entry into something that you're thinking. If you have a thesis but you want to get a sensible entry, then you can step down in time frame.
Absolutely. And to conclude today's show, Alex, let's move right back to that Bitcoin chart. In terms of risk assets, I know there's been a lot of reticence to gain any exposure to cryptocurrencies markets after what has transpired, both headline news and the unsavory acts of some individuals. But what are we seeing from a price perspective here on this chart of Bitcoin?
Well, you'd almost say that Bitcoin has been boring for some time, but today and yesterday we're certainly seeing some movement. A very strong bullish bar, oscillator broke above zero. It looks as if we're emerging out of this basing pattern. I mean, you mentioned earlier Edwards and McGee were both big fans and studied those patterns, and pattern analysis is really just a reflection of the market dynamics. You're able to draw lines on the chart because of the way securities are trading. And you can imagine here some sort of ascending triangle. We've got higher lows over here on the right side with a sort of a horizontal upper bound. And we've broken above that on a strong go bar with the oscillator in positive territory. So we'd be looking now to see if Bitcoin can get above these levels, which were, of course, support for a long time before they were finally broken. So Bitcoin on the move. We'll have to keep an eye on it as we go forward.
Absolutely. Every Thursday, 3:30 p.m. right here on StockCharts TV. If you're on YouTube, thanks so much for checking this out. You can also find GoNoGo Charts on YouTube or shoot us an email, info@gonogocharts.com if you have any questions. Thanks so much for joining us this week, and welcome to 2023, Alex. We'll see you again next week.
Yes, sir.
Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.